Hi, thanks for joining me on my Market Report. My name is Mike, and my Market Report is on mortgage rates. We go over what's impacting mortgage rates on a daily basis, whether it might come from the economic calendar or a combination of that with headline news or geopolitical items. But sometimes it can even get more confusing out there if you're just kind of following along, and good news is now bad news as the market sentiment changes. So we kind of go over what's on investors' minds and why they're acting the way they're acting, and hopefully give you that information that you might be seeking in case perhaps you might be looking to refinance or buy a property and go ahead and you're just kind of watching rates and trying to decide whether to lock in or kind of wait a little bit. So hopefully this will give you the information you might be seeking. A little bit about myself is I am a loan officer. I do work with the national lender. We lend in all 50 states. So if we could be of service to you, whether if you're looking to refinance or purchase, we'd love to earn your business. So please let's connect. But more than that, we'd also like to be a resource for you guys. If you guys got questions about anything, we'd love to be able to be there for you guys and answer that for you. So again, please reach out. So without further ado, we will go over the economic calendar today. Today is the big day. We got the CPI report that came out, and that is inflation. Last report came out, market reacted pretty negatively to it. But since then, we've kind of come back a little bit, but not quite to where we were. But let's go over it right now. We'll start off with the CPI report. This is the month over month, the headline number for the month of June. So May, it went up 1%. Forecast is calling for 1.1%, and it came in a little higher at 1.3%. So its year over year went from 8.6% with a forecast of 8.8 all the way up to 9.1%. So this is basically a 41-year high of inflation data. And now month over month for core, it went from, let me see here, core CPI, yeah, 0.6%. Forecast was at 0.6%. It came in a little higher at 0.7%. And its year over year went from 6% with a forecast of 5.7% down to 5.9%. So core actually pulled back. And what is core? It is basically you exclude food and energy from it. So basically, energy prices went up in June, and food and energy prices went up. So therefore, especially energy prices in the month of June, and that's why we saw that bigger spike. Now, as for core, yeah, we did have a bit of a spike, but our year over year came down a little bit as a result of that. Now, so a minor report here we kind of like to look at is every Wednesday the MBA released their mortgage loan activity report. It kind of lets us know if you know we have an increase in purchase transactions, or if we have a as loans originate, or if we got maybe even refinances. So as rates kind of ticked down a little bit over the last week, we did see a slight uptick in terms of refinances. However, purchase side did dip a bit from last week to this week's report. And of course, these are last week's numbers here. Last but not least, we'll touch on is a 30-year bond auction will be coming in a little bit later today. We'll have that, and that could have an impact on the bond market. Yesterday, we had the 10-year auction. It came in quite weak, and the bond market didn't react. It reacted pretty negatively to that news. So it's possible we could see the same reaction if we have a weak auction on the 30-year. So speaking of such, we'll take a look here at the markets here. Stocks are down today. Of course, they didn't like the CPI report. Basically, it translates the thought behind the report and everything that on investors' minds is that they feel that yes, we'll probably go into recession. Well, the odds of a rate hike from a 3/4 of a point hike in July's meeting in about 2 weeks will possibly could go up to 100 basis points. So we could see actually a 1% increase in the Fed funds rate coming up at the upcoming meeting. So we'll wait and see from the Fed, see if there's any comments about that. But the odds of that went from like 6 or 7% to 42%, a possibility. Now, a lot of them are projecting that, yeah, Fed will raise rates this year. However, 23, because they feel that we'll be heading into recession, they're going to be forced to cut rates. So that's the sentiment in the markets right now. Whether that is accurate or not, that remains to be seen. The Fed is pretty adamant about fighting inflation, and if inflation is to persist in 23, it's possible that the Fed may surprise the markets and keep raising rates or keep rates high and not cut rates as to keep inflation in check and try to bring inflation down. To them right now, it seems like that is the course they want to go, and that would be more important than jobs or anything else in that scenario. That's kind of what happened in the early 80s when Paul Volcker forced ourselves into a recession as he raised rates into double digits. Basically, the first time in our history we had double-digit interest rates. So it was more important to go into recession and keep inflation in check than to worry about inflation data on that. So coming up this week, we do get the PPI report, which is wholesale on the wholesale side of things, inflation on wholesale things. So that will be it'll have some importance because we were talking about inflation, but also more importantly, the corporate earnings report should be we'll start getting those tomorrow. So investors will be checking on those. They want to see profits. They want to see how much costs have gone up, how much inflation's affecting profits on corporations. So that way we'll get a little bit more information. So let's go ahead and take a look at mortgage-backed securities, see how it is today. We're up about 2 basis points, almost on even. We're just barely above the 25-day moving average. As you see this wick, we were way down. After the announcement, I'll show you right here real quick. So as soon as the release of the CPI report, we just dropped. Since then, we've kind of worked our way back. What we're kind of hearing in the market is that some investors think that we might be made a peak. As you saw, the core actually did dip slightly from 6% down to 5.9%, whereas the headline news with the food and energy went upwards from 8.6 to 9.1%. So obviously a 0.5% increase. So this morning we were down about 58 basis points. Since then, since we pulled back, we've had some lender reprice for the better as a result. So that better pricing is going to be closer to where we were yesterday, since it's more close to unchanged levels from yesterday's close. So it'll be more likely again, reprice for the better, but the better pricing is going to be closer to our unchanged levels from yesterday's in comparison. All right, so the treasuries are down a bit. As we spiked all the way up to almost the 25-day moving average. They actually touched 3% at 3.07. Did spike up there. Now, since then, we're down to about 2.94 right now. So right now, it's kind of holding steady a little bit as a result. All right. So lastly, let's go ahead and take a look at the average rate for conforming loan limits. These are based off of day results. So these are more off of yesterday's, and so they're day delayed. Also, they do have points added to them. So that's why you're not seeing in increments of 1/8%. So we'll start off the 15-year, which dipped below 5% down to 4.97% now. And the 30-year is now down to 5.71%. All right, folks. Hope that gives you the information you're looking for today. Hope it gives you a little better understanding what the markets are doing. If you guys got any questions, please feel free to reach out. If we can be of any assistance of any course, whether it's a rate quote or if we can run some numbers for you guys if you're looking to refinance, or if you're looking to buy, you might need a pre-approval. We're here for you guys. So please feel free to reach out. If you guys do us a huge favor, if you guys like these videos, please smash that like and share button. I greatly appreciate it if you can help us spread the channel. We do appreciate you guys, and wish you guys well. And thank you so much for watching. And we'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.